Let's now talk about how all of these cues really impact us, all of the domestic cues and the stocks that you should watch. We have Rima, Surbi and Vivek joining us with the trade setup. Guys, a very good morning to all of you. Rima, let me come to you first. The global setup definitely looks very weak. We are going to start on the back foot, but take us through what we should watch.
Good morning. It'll be interesting to see how the markets marry the weakness that we're seeing on the global front, which you've been highlighting, versus the positive development about Indian bonds getting added into the JP Morgan Emerging Market Bond Index. So that's a positive with positive implications for the bond markets, the Indian currency, maybe the banking stocks as well. There could be a confidence rub-off on the Indian equity markets as well. But on the other hand, you've got dismal global cues. The Dow was down more than 1%. The Nasdaq fell close to about 2%. The 10-year U.S. Treasury yield hit that almost at that 4.5% mark. The dollar index firm above 105. And week to date, you've got the Dow down 2.5%, the S&P lower by 3.5%, and the Nasdaq nudging towards a 5% loss. The Indian markets too have been pressure. So this has been a tough week for the Indian markets too. We were down for the third consecutive session yesterday. Week to date, the Nifty's lost more than about 2%. And now the GIFT Nifty is suggesting a weaker start. And it will peg us closer to that 20-day moving average on the Nifty, which is 19,686. But as I said, we've got a very, very positive, big milestone development on the bond markets. We'll be discussing that in greater detail. So it will be an interesting, tussle between the positive news in the bond markets and the weakness that we have on the global front, which is hurting the equity markets worldwide. Back to you.
Oh, absolutely. This will be very interesting to see how the session really pans out. Rima, thanks a lot for getting us all of those cues. Let me hand it over to Surbi now. Surbi, a lot of important stock-specific news flow also that came through post-market close yesterday.
That's right. So I have quite a few stocks on my radar. The first one, of course, is Glenmark Pharma. The company is going to divest 75% stake in its subsidiary Glenmark Life Sciences to Nirma. Now, the divestment is at a price of 615 rupees per share, which implies an equity valuation of 7,535 crores. Next is ICICI Lombard. Bhargav Das Gupta tenders his resignation as the MD and CEO of the company. Wipro, the company appoints Aparna Iyer as the Chief Financial Officer, as Jatin Dalal resigns as the CFO of the company. Next is Suntech Realty. The company partners with IFC to create a joint platform with an investment of up to 750 crores. JSW Steel is going to sell its US plant and mineral rights to West Virginia Properties for $24 million. Ultratech and India Cements will also be on our radar. The company will buy 74 acres of land in Andhra Pradesh from India Cements for 70 odd crores. SJVN, the government will exercise its green shoe option of 2.5% stake as the offer for sale was oversubscribed. NBCC, the company has been awarded an order worth 100 crores from SAIL. And lastly, ICICI Securities will be on our radar as SEBI has issued an administrative warning with relation to the merchant banking activities and also initiated a quasi-judicial proceedings against the company.
All right, that is a long list of stocks. Surbi, thanks a lot for bringing us to, up to speed with all of that information. We're going to track these in today's trading session. Finally, let me bring Nigel in also. Nigel, we were just going through the fact that, this has been a week for our markets and across the world as well. But take us through what we should track.
Well, it's been a week for sure, Pavitra. And if you look at it, it'll be on track for the worst week in the last 7 to 8 months, both on the Nifty as well as the Nifty Bank. This bond inclusion for the Indian markets, well, that could be some kind of positive rub-off out there. And now you have the FIs that had some short positioning as well. So they've added close to 14,000 short contracts, just yesterday, though they continue to remain net long on the index, because they have 56% of their positions on the long side. But in terms of the long positioning, it's come down by around a third. Just last Friday, the net long positions was at around 63,000 contracts. That's come down to around 22,000 contracts odd. And I like some shorts in the system because if you get some good news, that's what could perk up the markets. The call writing continues, 19,800 call, 19,900 call. Between them, they added close to 96 lakh shares. But on the downside, you have the 19,700 put that added close to around 25 lakh shares odd. So I'm looking at that mark, and the 19,700 put, the premium was around 75 rupees. So you deduct 75 from around the 19,700 mark, you get the 19,625 mark, which will be crucial on the downside. So this 19,625 to around 19,700 becomes an important support level. The 20 and the 50 DMA as well tying out there. And on the Nifty Bank, it's trading in a very, very crucial range. On the upside, you're looking at the 20 and the 50 DMA. But on the downside, yesterday at least we managed to defend the 100 DMA. and the bulls will take heart from that fact. So you're looking at that lower level and you wanted to defend the 100 DMA on a closing basis. Let's see how this goes, because there is a tussle between good as well as bad news. Maybe, in fact, today could be that day when, in fact, we see a bit of a relief rally, though the implied opening is suggesting a 100-point downtake. Back to you.
All right, Nigel, thanks a lot for getting us all of those cues. Let's see how things really move after we do get that gap down start. For now, it is time for a short break. But when we come back, we're going to talk about the big story. JP Morgan will add Indian government bonds to its benchmark emerging market debt index starting next year. More on this on the other side.